Good morning, good morning, good morning.
My name is Sean Dexter.
And my name is Krisha.
And we welcome you to the Mango Grove for your daily analysis video.
Yeah. The energy is unreal today. I mean, just look at these charts. Look at the volatility on Bitcoin. So it's been a very, very interesting past 1 week. I'm sure many of you have also had a very interesting week. I mean, just look at this, guys. We actually went down to 3K. 3K. Oh my Jesus. What was the lowest point of this candle here?
I think I actually caught the wick. I did.
I think did you post a screenshot on on the main chat?
I think I showed you guys in the video too.
Yeah, that was pretty neat. In fact, I didn't even know. I just remember this. He just came barging into the room. He's like, Krisha, and I was asleep. I was being a nap queen and I was taking my daily nap, and he's like, Krisha!
Oh man, the way she woke up, she was like, don't do that.
Don't do that.
Funny. But I was just so excited.
No, but that was actually really, really good. But good job on that.
50% in like a couple of hours. 50% pump. But I do want to emphasize yet again, if I have not in the past video where we talked about this, when you are trying to catch a move like that, you reduce your position size. Yeah. So I talked about how the position size I took over here on that move, all the way over here. So it came down all the way down to 3,600 on the deadbit futures, guys. 3,600. Not trying for long over there would have been criminal, but at the same time, you got to account for that volatility. You got to account for that spread, for the slippage. So much that could occur. And at one point, I was actually sweating, right? I was actually sweating, even though I reduced my position size, because, man, those order books got so thin, so fast, and at one point, it got empty. I could see only 4 orders in the order book, and I'm looking at orders that were making my heart thump. And yeah, going back to what I was saying, the position size I took over here was like only 72% actually of the position size I took over here. And that's one of the reasons why my heart was thumping. Maybe I shouldn't have taken as big of a position size. So yeah, try to catch a knife over here. Do I recommend it? No, not at all. Not unless you really know what you're doing and you have an opportunity like this. This was freaking capitulation, man. Like, we did a 60% drawdown from the highs over here. Yeah, Krisha, this was that major weekly resistance level.
That was, I mean, okay, so speaking of heart-thumping price action, I mean, the volatility has been insane, yes, but I think that the one thing that everyone's been looking at on that last weekly close was what? Bitcoin lost the 200 simple moving average on the weekly time frame. Guys, we didn't even do this here. Bitcoin didn't even lose the 200 simple moving average during the bear market. Now you wonder if this was the bear market, considering we're back there, right? But no, I mean, that's one thing that everyone's kind of looking at right now. So let's go ahead and, switch on those.
Hit the first.
Oh, sorry. This is Sean's.
So there TV. It is. We close under the dreaded weekly 200 moving average.
Let's zoom into that to, oh my God. But no, that was pretty brutal. So the fact that we actually did friggin' close that weekly candle underneath the 200 simple moving average. What are your thoughts on this? I mean, this was friggin' bearish. Like, if you have to ask my opinion right now, I think I'm looking for shorts, guys. What about you, Sean?
Well, yeah, I'm looking for shorts too. This is bearish. But I do want to address one thing that's pretty important, because everybody's talking about this. Everybody's talking about the weekly 200 moving average. And yes, it is important. And at the same time, people are, in a way, misthinking or overthinking it, all right? And this is why. I might be all over the place over here, so bear with me. But everybody's been PMing me about this 200 weekly moving average and saying, Sean, we've never, ever, ever closed underneath the 200 weekly moving average, and we are going to go to 1K. We are going to go to 0. It's done. It's over. Right, Krisha? Didn't it scare the hell out of you?
Of course it did. I mean, it still looks scary. I don't understand. We've never lost it, have we?
That's the question. Okay, so here's what people are doing. They're looking at this. They're zooming in over here, and they're saying, hey, we've lost the 200 weekly moving average. We're going to 0. Okay, and then they say, we have never done that before. And they zoom out, and they're like, look, guys, we've never done that before. We've never, ever done that before. And that's fair. We did not close underneath over here. But over here, they're looking at it zoomed out. Is that fair to look at this zoomed out, but over here you look at this zoomed in? let's go ahead and zoom in over here. Shall we? Shall we? Let's do it. Let's do it. Let's zoom in, guys. Let's zoom in. Let's zoom in.
Didn't it hold?
Oh, what do we know? What do you know? We actually closed underneath it, had a major wick underneath to the previous market lows, okay, putting in a high low compared to this wick over here. Closed underneath, closed underneath, closed, retook it, closed underneath, closed underneath, closed underneath it, and then had another parabolic run. So don't get me wrong, I am not saying that this is bullish. I'm not saying that because of what happened over there, you should be looking to buy over here. In fact, I am taking shots. Okay, I've been taking shots whenever I see a good opportunity, and I've been enjoying doing so because this is bearish, right? Similar to what we were doing over here, Krisha. Okay,
Yeah.
but it's not what people are making it out to be. So be very careful about the narrative being pushed, right? I always talk about the narrative that is being pushed, and there's so many bad narratives out there in regards to the Fed, blah blah blah. Anyways, let's talk about this a little bit more. Why do I think that this is very, very similar to what happened over here? Okay, and I'm not going to get into the entire fractal nonsense that people talk about, guys. To me, what matters more is the psychology of what is happening. So over here, we had a major bear market into the 200 weekly moving average, got supported there for the first time, had a bounce, okay, came down there, had another bounce, put in a higher high, okay, at least on a candle closing basis, yes, we did, and on a wick basis too. So we put in a high, we closed higher, as well as we put in a new high, and then what do we do right after? Dump back into the 200 weekly moving average, okay, and close underneath. We pretty much lived underneath it for around 2 months, okay, and then we had another run to the upside. What do we do over here? Okay, again, very similar action where we bounced off it, we put in these highs over here, had a drawdown and put in a higher high. Okay, now again, I'm not looking at the fractal, guys, I'm looking at the psychology of what's going to happen, of what has happened rather. And look at this, we closed higher. Did we put a wick higher too? Yes, we wicked higher too. Again, similar psychology, okay, baiting the market in over here. But us at the Mango community, we were playing it safe. We identified the zone as major resistance and we took our profits, right? Yeah. But I don't mean to brag, but I couldn't resist. Right over here, baiting the market right over here, and then dumping aggressively onto the weekly 200 moving average, closing underneath it, wicking all the way down to 3,900-ish, making a higher low compared to this guy over here, which is 3,100. What do we do over here? Something very similar, right? We closed underneath the weekly 200, okay, wicked onto a new low compared to this cycle, you could call it, but a higher low compared to this guy here, 164 around here and 193 around here, right? Now, still, I'm not saying you should long this because of what we are showing. It is very irresponsible to do something like that. Be safe and wait for the trend to change. And the trend, guys, is still down. The trend is down. The 4 hour, by the way, might be showing a trend change very, very soon, but we're not there just yet. So that's what I'm looking at, Krisha. Like this weekly 200 moving average, we've lost it, yes, but let's think about the entire market situation right now. We have capitulation. To me, this may very, very well be capitulation. Do we know that for sure just yet? No, we don't. But just look at the big picture, guys. Look at don't get tunnel visioned on just that. Okay, it is still bearish. You still have to be looking for more shorts than you should be looking for longs, in my opinion. But do not get tunnel visioned on that weekly 200 moving average.
Yeah, I agree. And the thing is that there's too much going on right now, just in the markets in general. Okay. To not look at a more sort of holistic view on what's going on this chart as well. But coming back to price action, I think we'll get into the fundamental side later, but just coming back to price action, this was very, very interesting actually, this price action here in the previous bear market. What do you think over here? Were we making higher lows on the candle body closes here? Yeah, we were. Notice that.
Yep.
So that's something that was, I usually I know Sean, you're not into this as much, but I usually like looking at the candle body closes. And I will give that a bit of importance. And as you can see over here, just looking at these 4 sort of lows that we had on the weekly, I think you can even draw a diagonal there.
Well, okay, so there's another thing over here that I didn't mention that is very similar to what happened with us, with our current price action, right? Right over here, you could, like you said, you could put a horizontal right over here, right? And if I was playing this in these market conditions, I would be looking at these candle closes over here and these candle closes over here, just like you just mentioned, and I would be saying, hey, if we wick underneath these lows, even wick underneath these lows over here, I'd be getting extremely, extremely bearish, okay? Now, that's exactly what we saw over here, right? And that's exactly what I've been saying with these candle lows over here and these candle closes. I was looking for either a candle close underneath 6,800, 6,900 or wick underneath these lows over here. Very, very similar, and we did that. We wicked underneath and we closed underneath over here. Over here, however, in this major market dump, we had the wick underneath those lows, right? But we did not close underneath, right?
Yeah.
We did not close underneath. So that's what's different. So yeah.
I think this was a more sort of, bullish kind of structure here that it was drawing.
Nothing bullish about this.
I think, but what is to note here was this just losing that 200 moving average, and I think that was the point that we were kind of getting at. So just because we lost it, I think that's the point that you were trying to get at. Does not mean you get too complacent, even on the other side, on the flip side, of the trade. But right now, guys, I mean, the picture is freaking, just look at this. It's bearish as hell. But what do you think of this top right here? Now, this is one piece of the price action on the weekly time frame, especially, that can be looked at as a fake out, right? As in, because, I mean, when you're looking at price structure, what are you looking for? You're looking for price to be taking out some highs. And this was on the weekly. It's not like on the daily or the 4 hour or something that, it'd be like, oh, okay, whatever. We got faked out. This was a weekly freaking fake out. That's not easy to put in. But so even when price did come down, yes, we did take our profits here, right? Because of that cloud resistance. However, when price did come down, I was not expecting this. Were you expecting this?
No, I was not expecting this. And if we did, we would have traded for it. But, Here's the thing. Everybody's talking about coronavirus and how coronavirus was the reason all of this happened. But if you think about it, guys, a lot of this was kind of pre-told by the charts, right? Which is why I always prefer technical analysis versus using fundamental analysis for your trades. Because did we really need coronavirus to catch this trade? No, we did not, right? Let's do a little recap for all of you who are just tuning in. We took a long trade right over here off this Tenkin. Let's turn on the 21 EMA for this too. We took a long right here, right? And it was essentially the same trade that we took over here off this 21 EMA, where we caught the bounce all the way to the top of the cloud. The same trade we tried for over here. And then we actually started getting out of our trade even though the trade was going our way. This wick over here, guys, was the trade going our way. Why did we get out? Why? Because we were expecting this candle to close above the 21 EMA. And that was the big first sign that, hey, even though we're getting the bounce we expected, we did not defend the 21 EMA like we expected it to. That was part of our thesis. Yes, the trade is going in your way, but you're invalidated either way, right? And that's one of the big things I even teach the guys in the seed program. If the market's giving you an opportunity to get out of profits even after you're invalidated, take it. And right over here, throughout this entire week, guys, we were talking about how, hey, you know what, Sean, you may have gotten bull trapped. I was like, guys, I may have gotten bear trapped in that I'm getting out of my trade even though it's going up and we may bounce all the way to the top and I'll be fine with it. I'm glad I followed my rules, right? I'm glad I am following my rules because at the time I didn't know this was going to happen. And I was scaling my way all the way out. I took profits on the 21 EMA weekly 10 SMA, and then daily 21 EMA. And what do you know, guys? Right towards the close of the week, 12 hours before this week could close, boom.
Yeah.
So even though this entire move looks like it happened over 2 weeks, this entire dump happened in the last 6 hours or last 12 hours of the previous week. So this literally happened over 1 week. We dumped literally a good 60% in 1 week. And now here's the thing, I didn't go short. I should have, and all the signs were pointing to it, right? We closed underneath the Tenkin, closed underneath the cloud, we lost the weekly 21 EMA, and the mango vine on the 12 hour was calling short too.
Yeah.
everything, like, and the mango vine is like what, 99% accuracy rate with mega moves. You guys who have been following us know how strong that has been, and I didn't take the trade. Do I have any regrets? No, because it was Krisha's birthday and I zoned out her birthday. I'm like, I'm not going to be taking any major trades that will be sitting on my head. I just want to be focused on that. And this is one piece of advice I can give you guys, is that when it comes to picking your relationship versus trading, whether it be with your parents, your brother, your sister, or your wife, or your fiance, it doesn't matter. Always pick the relationship first, because there'll always be market opportunities. And when I've spoken to pro traders, one of the biggest regrets is them neglecting their relationships. All right. So yeah, a little sidetrack over there. And it also makes me feel good about missing this trade. So yeah, where were we? We went off on a huge... Oh yeah, so the point is, you did not need coronavirus to catch this trade. And this is another example of why I always say leave some of your trade in the trade. Do not take all your profits. You may be very tempted to, and it's going to suck when the trade pulls back, but you'll never know when a move like this happens, and it happened. And so many of you guys were in this trade, but very few of you caught the entire move. Why? Because you guys got greedy at, I don't say greedy, okay, but you guys took your profits at 7,000 or took your profits at 6,000. Maybe some of you held all the way down to even 5,800-ish, but this thing went down to 3,600. Okay, even if you left 10% of your trade at around 6,000, that would have meant a massive move. That's a 40% move from there. Okay,
but you know what? Whoever caught that move to the downside, you know, congratulations to you. That's some major props to you. I mean, quite honestly, I don't know, but I was not expecting, you know, just absolute capitulation, just taking out this entire 6K freaking range of support the way we did. That just blew right past. And quite honestly, guys, I mean, I've been looking at this chart for freaking years now, and I was not expecting that. Okay, that was put in for how many weeks? That support, that 6K support now, from here all the way to that past sort of bull cycle. This was, how many, what is that? About a year?
Yeah.
About a year of setting in that range of support. 1 year of setting that in, and we just took that right out.
The second time I just,
you know, so
it right out,
I mean,
we didn't hold it on the way up either. I wasn't expecting that to hold. To be honest, at 6,500, I was surprised that held. It's not that I went short there. I wasn't going to play it against that support line, but I was expecting that to break there too, but we had cloud support over there. This time we didn't even have cloud support, so...
Yeah, we barely had it, as in we stopped a week, you know, when on our way up to that 14K region, when we did have that beautiful parabolic move to the upside. I mean, we did have a week, you know, that stopped there. I'm sure a lot of people probably even took a short there, because that did, that was resistance.
That's true.
Okay, that had some weekly relevance. So, fine, we did have that stutter stop, but people probably got so screwed, whoever did take that short. However,
there
guys,
are people who probably bought 6,600 this time around.
Yeah.
Right. So the same thing happened again.
Yeah.
They bought into this and got liquid.
And that's what you were talking about, right? People that probably kind of cut their short, you know, short. But no, I think, but still, whoever caught that, man, just anticipating this move was not easy. Like, who would have anticipated this move? Like, the cycle has changed entirely now. The signature of this cycle is nothing like we've seen in the past few cycles. This was the bear market. So we never had a parabolic.
We are in a bear market.
Now we are, of course. But no, like, look at this run. Like, what was this? We went from 3K to 14K in a matter of months. That was something very different, first of all. So there are a lot of, you know, things that have sort of changed this time around in this cycle. So anything can happen, and I think that's what we should all kind of brace ourselves for at the end. What are your thoughts on that? Well,
yeah, definitely. Which is why risk management always comes down to you protecting your account first across all situations, right? Yeah. That's the reason why I spent 5.5 hours on the risk management module in the C program. And you guys can pick out anyone in the C program and ask them about the risk management module. You guys will see how much there is to it than people think. Okay, there's way more to risk management than people think.
Yeah, so, I genuinely believe that is an edge on its own. That is truly an edge on its own. Just having a risk management system that works for this, you know, for the chart that you're playing that is the edge right there. But coming back to the charts, is there any other level that you're looking at besides the 200 MA to base your trades off of? Is there anything else on the chart?
No, not on. So, what are you talking about in terms of taking a short or taking a long?
Yeah. So what levels are we looking at now? What levels should everyone sort of kind of watch out for? What is our the most sort of immediate resistance and the most immediate support?
Right here. So we have 6,500-ish, 6,600 and 5,000. Okay, let me just adjust that a little bit. I'm looking at 6,500. This is the key level for me, 6,500. Okay, that's the key level for me. Somewhere around here, you are better off always playing a zone. That's where I'd be looking to go short. The weekly Tenkins all the way up to 7,200, and that does line up, by the way, with the monthly 21 EMA too. So if we do actually see a major squeeze and actually bounce and retest that monthly 21 EMA, that would be the big play. Do we actually get that? I don't think we get that this month. The most craziest thing is if we actually close the month above the monthly 21 EMA. That would be nuts.
That would be insane.
That would be nuts.
The volatility would be so insane.
The volatility is crazy right now, though.
But getting a move like that on the monthly, the volatility would be frigging
What about
stupid.
you? Are you looking at any major horizontals?
I am actually. The one that I am looking at now, I was looking for all the daily sort of, candle closes to close over this level. And this is what I am looking at. It's at around that 4,980, I believe. 4,990. Yeah. Okay, I'm looking at this price action right here, this right here, and this right here. Okay. Now,
prices actually,
we're actually holding.
We closed above it.
We've been closing daily candles above this level. And why I'm looking at this level is I noticed that every time Bitcoin does take out this level, I'm noticing that volatility just spikes. So if you just look at...
That's like staring us in the face, and I missed it right there. It's like literally, this is how we actually do a support and resistance this is very interesting, because in the C program, while I was teaching support and resistance, I'm pretty sure I marked out this level using the techniques we teach in lesson. Yeah. And it's funny that I missed it.
No, that's how I got it.
That's how you got it?
That's how I got it.
Okay.
And
so I missed it myself.
Yeah, so no, this is all from techniques from the Mango Seed program. But no, I am looking at this level right now. I'm looking for price.
The daily?
Yes,
of course. Has the daily been closing above this?
So this is where things changed a bit, okay? So now we have managed to close the past couple of...
closing above it.
Yeah, however, this was an outlier right here. Now, if you just kind of, I'm not going to, you guys can take the number down. It's at around 5,990, I believe.
I think you can write that one off, because that was the capitulation event.
Yeah, so there was a lot of panic.
The fact that we closed right above it after and been defending it, we defended it yesterday too, and yesterday we went down to 4,450, and then we closed above it.
Yeah. When it comes to capitulation and just, when people start panicking, the market starts to panic, you got to give your zone some sort of buffer room. So even if you do have a bid, just have a good sort of standard deviation to that. Give it some good breathing space. So Sean, speaking of capitulation, and price closed underneath the cloud, so I was expecting to make our way down. However, I was not expecting this. I was not expecting freaking 3.9K. No frigging way. What do you think happened here? What was this? What kind of was the root of this capitulation? What do you think, rather, was the root of the capitulation?
Bitcoin caught coronavirus. It's obvious.
Looks like it. Yeah.
Respiratory failure, guys. Respiratory failure. So, okay, anything I say right now is going to sound like hindsight analysis. I'm just going to come out and say it out loud. What I will say, however, is what didn't happen. I want to address this. Might be going slightly off topic, but I got a PM today from someone asking me that, hey Sean, was this retailers capitulating? Was this retailers panic selling? You mentioned the word panic too, by the way. I'll tell you that it's not. I don't think so. I strongly don't think that these were retailers selling. And the reason is because when he brought it up, he showed me an article by Mike Novogratz. Okay, everybody's familiar with Mike Novogratz, and he's like, Novogratz says it was an institution selling, and it was retailers selling. Retailers panic selling in the crypto market because they're a bunch of noobs. They don't have hodl power. Those aren't his words, but I feel like that was the implication behind it. that retailers are panic selling because of coronavirus. And because he said it, I'm even more certain now that this was all institutional selling. I'm even more certain. And that's the reasons. I had reasons before Mike, but Mike just, Novogratz rather, pretty much just solidified my thoughts, because every time he says something, it's pretty much the opposite that is the truth. It's literally the opposite. Now, I don't know if it's because he's flat out lying, or he's trying to get us to take the other side of the market that he is, or he's just not the brightest. I don't think Mike Novogratz is not the brightest. I think to get to the position he is in life, you have to have some level of intelligence. But even over here, by the way, guys, he was screaming, "This is the bottom. This is the bottom. This is the bottom." And I don't see how anybody would have been screaming, "This is the bottom." Not over here. Not when you were doing this. You could not have had that much confidence. But he was screaming it. And what happened? Boom, 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 boom. Now over here, what is he saying, Krisha? He's saying that institutions weren't selling. And I am almost certain it was institutions selling, because if you think about it, everybody was bullish during this entire run because institutions are entering the market. Backed, right? Yeah. It was all about backed, right? Now, here's what's so funny about the crypto market. They want Bitcoin, and I'm talking about all of us here, guys, all of us, okay, not just the rest of the crypto market, me included. We want Bitcoin to be uncorrelated to S&P. We want Bitcoin to be uncorrelated to traditional markets. But at the same time, we are bullish when institutional investors are buying, and we shill that narrative. Institutions are stepping in. Institutions are stepping in. Well, if institutions are stepping in, how in the world is it going to be uncorrelated to traditional markets? Because institutions are either risk on or risk off, okay? And I don't want to get into a deep explanation of all of that, but they are going to adjust their risk according to the volatility that they are facing in other markets. And if those of you, again, who are in the program, we do something very similar with our risk management, right? You guys know what I'm talking about. So if they are experiencing some crazy moves against them in traditional markets, they aren't going to be looking at Bitcoin and thinking, hey, you know what, let's hedge into Bitcoin. No, they're not. Think about how ludicrous that is. So they were probably getting out right around here, guys, around 9,000, probably even 10,000 they were probably hedging at. And then as the sell pressure started coming in heavier and heavier, as the traditional markets was taking more and more for hit, they had to de-risk more of their Bitcoin, okay? More of their Bitcoin. And perhaps the market just couldn't handle the weight that the institutions were actually holding, and then it caused a cascading event of liquidations, okay? And I do think a lot of funds were forced to sell on the way down here. They were forced to sell because of the way they manage their risk. And it is really important to study your opponent, which is what I do, if you want to play these markets, right? Because and what I mean is, guys, everyone is your opponent. Everyone else is your opponent. You need to know how the other players play to be able to play well, right? It's like any other game. So I don't want to go into too much detail, but you guys, I hope you guys get what I'm trying to say.
So what do you think is happening with the retailers right now? Do you find that you're getting a lot of questions on whether, Sean, should I hold, should I sell? What are your thoughts on retailers right now? So if you think that, and I think I like the narrative, not the narrative, it's not your narrative, but you've observed that, it's likely that institutions are probably stepping in and selling. That's what sort of caused the dump, which makes sense now. It actually makes a lot of sense, because I think everyone, as soon as coronavirus, the news really kind of got really, really serious out there, and you had like freaking economies going into lockdown and stuff, everyone started to go risk off.
Yeah.
So it makes sense how this could be correlated, and this could have very well been, triggered by institutions selling. What are your thoughts on the retailers? Do you think there is still a lot of hodlers?
I think so. I think so. I think all the hodlers are still hodling.
Okay.
I think professional traders got liquidated, probably took big hits and got liquidated and were forced out. I think professional traders. There's a difference between retailers and professional traders. Retailers are probably hodling, and now they'll probably be following a lot of herd mentality and looking to short these levels at around 5,000. It may or may not pan out for them, but I think that unless you are a professional, you should be very cautious trading this volatility. That's what I can say. But you make me think about something interesting. I've been getting more questions than I expected as to whether people should be looking to buy more here. So it makes me wonder if we have another drive down to 3,000 just because there's more liquidity in the market to sell into, right? But I really don't want to take a strong opinion on this. I really don't. I think anybody taking a strong opinion on whether this is a bottom or not should be looked at with caution. Okay, you really should. You can never know what the top is. You can never know what the bottom is, not with any certainty. And you can take a educated guess, but there's not enough information right now.
And what are your thoughts on the Fed and their easing? So apparently they introduced 0% interest rates. That was like an announcement or something. But there's a lot of liquidity that is available suddenly that the government, the Fed, has made available. What do you think is going to be the effects of that on the crypto market or just markets in general? Hell, do you think that could be, the cause for a potential rally to the upside, or maybe even recovery?
Not a V bottom recovery like people are probably expecting because of what the Fed did. I don't think so, at least, and I'll be happy to be wrong. But I don't think so. What people don't understand is that a huge reason the Fed does what it does in terms of announcements is because of the psychological effect it can have on the markets. Okay, this has always been the case. Their strategy since freaking 1929. They make an announcement. They tried in 1928 to make announcements specifically to curb over exuberance in the market. Okay, it's been one of the strategies, and in time it has been self-perpetuated in that because the Fed is saying something, it is likely going to occur. So first it's the psychological effect of the market, and then it's the actual effect over time. It's very, very similar, and again a little bit off topic, kind of like the halving that everybody was talking about in terms of Bitcoin. I didn't even know the halving was coming up. That's how much I put it off my mind, because you shouldn't be trading based on fundamentals like that, because you're likely going to get counter traded into them. What do you know? We dump into the halving, right? So freaking typical.
Yeah.
So the halving too, very similar to the Fed in that there's the announcement, there's the effect, and then when the announcement actually, the implications of the announcement, right? When it's implemented, the actual effects are felt only over time. So on that, in terms of traditional markets, I think you will only feel the liquidity of the Fed on the markets only after a while. You're going to see some volatile moves up and down, people trying to figure out what is actually going on. And during that time, the Fed's injections is going to be felt in the market. You're going to see volatility start compressing. You're going to start seeing a range develop, and then we can start saying, hey, you know what, the Fed effects are in play. Until then, it's too early to say.
Yeah, okay. That actually makes a lot of sense. The whole, also like the way you just compared it to Bitcoin and Bitcoin's halving. So I think that's definitely something to consider.
And if you think about it, a lot of people are comparing it to Fed, comparing the Fed stepping in right now to 2008. What are your thoughts on that?
I don't know. Okay, I'm just gonna come out there and just tell you that I don't know. I just remember that when the Fed did step in, they stepped in like QE was introduced when everything went to shit.
Exactly.
Everything went to shit. So there were, freaking companies got liquidated. A lot of companies went down, but it's only after that QE actually stepped in. But what we're seeing here is QE stepping in before any sort of companies actually capitulate, actually go down. So I don't know. I feel like QE now, everyone's gotten very, very comfortable with the topic. Everyone's gotten very comfortable with the concept. So that's why they're able to sort of introduce this monetary or even fiscal policy they've introduced to actually curb the ramifications of what's happening here. But I don't know, guys. This could go anywhere right now. I don't know. I don't know what's going to happen. I think this is we are living in very, very exciting but very different times. What do you think? Has there been any like historic event that we could learn from and apply it to what's happening right now? What do you think is the most sort of akin, from past market cycles, market crashes, from everything that we've had? I mean, you've been a student of economics, you've studied a couple of the crashes. What do you think, what could we compare this to?
1907, I would say. It's funny that nobody's bringing it up. 1907. It was really really interesting. I made that comparison somewhere around. This is the daily, right? Somewhere around here, I believe. Right, somewhere around here. I made the comparison. When SPY had its initial dump, okay, it had its initial dump, and the Corona thing was just beginning to come out. This is what I had said. I said this is very similar to the earthquake that California had in 1906. Okay, so the markets are unwinding then. Okay, it was the catalyst that caused the market crash.
Okay,
but there were already things in place. There were already several weak links in the stock market already in place that needed just a break. Okay, needed that catalyst to come and break the link and break the chain and everything fall. So we had a very similar situation with traditional markets, and we're not going to go into all of that right now, but everybody was just watching the market get very very frothy. And again, very, very similar to 1907's crash. Towards the end of 1906, 1907's beginning, a lot of retailers started buying into the stock market. Very similar to what we saw rather in traditional markets. So many of our friends started suddenly becoming pro traders, right? Buying Nvidia, buying AMD. People are just buying the things that they are familiar with in real life and being very, very happy about their gains. And what do you know, they're freaking down hardcore right now, and it's crazy to see the similarities.
We know quite a few people that got their accounts
wiped, zero.
So it's scary.
So that's what I would compare to what happened in 1907. It started with the earthquake that led to started with the earthquake in 1906 that led to the crash in 1907, the unwinding, and its effects were played out over a long time. And let me tell you something, guys, and this is where I think people are being very, very unfair to the Fed. Okay, people keep bashing the Fed, but I don't think their intentions are in any way bad. They are just trying to help the best they can. Yes, there are lots of bad players. Again, I'm no expert. This is just my very, very uneducated opinion. Okay, 1907 didn't even have a Fed. They didn't have a Fed. Okay, and things could have gotten really, really bad unless JP Morgan, the Great, stepped in. He literally acted as the Fed. He was able to through just his sheer persona, the person he was able to rally the top bankers in the States and get them to front a lot of liquidity, okay, at a time where the market needed liquidity. And it was because of the great JP Morgan that the Fed was actually in place for the next crash in 1929.
Wow.
Okay, and it was ever since then that the Fed has been making mistakes and learning from it and getting better and better and better. And on that note, it goes back to what you were saying. 2008, quantitative easing only took place after, right? And it was hard for them to actually even implement that. That was ludicrous at the time. They had a lot of pushback at the time. Now they are able to use it a lot more effectively, right? Think about a carpenter having to create a hammer first to be able to use it just to get the job done, and then for the next job having the hammer already at hand for the entire job. So it's a different dynamic here, guys, and it'll be interesting to see how this plays out. What I say is, do not try to be a smartass. Do not look at everybody else on Twitter as everybody's an economic genius suddenly. I'm not an economic genius. I'm not even trying to claim that I know anything. What I'm trying to claim is that it is very important to sit and learn. Watch what's happening. Watch everybody's reactions, because this situation is going to happen again in the future. Maybe 10 years, 15 years, 20 years. Something else will happen. And it is an opportunity for all of us to get prepared. Okay, get prepared and learn from it. And in that scenario, we'll be able to perhaps profit even more from it. A lot of profitable opportunities now in the market, but that's my thoughts. Every time you will learn something new and you will get to project for the next situation.
Awesome. So now you guys have the rundown on what Sean, your things. What about, do you want to give your Link audience anything to chew on?
I've been just watching Link in the ticker over here, just like
I've actually been like,
I want to look at it.
I'm like 10%. What? That's been kind of at the side of my eye there.
Okay, so the horizontals. If you guys just pretty much copied down the horizontals I did last time around, yep, just oscillating between those, right? what do you know? It's been pretty bad.
Yeah.
What were we looking for, guys? We were looking for Link to close the weekly above this blue zone here. We didn't do that. Because we didn't do that, what did we do right after? Come and touch the bottom of the zone yet again. It was literally everything going according to plan. It's not a pretty look, but you were able to take the other side of the trade, right? As soon as we close underneath here, that was your big sign that, hey, I either get out of whatever position I do have left, or perhaps trade opportunity from here to here to the downside. That was probably a good move. Wow, that was a good 40% trade. Yeah. Damn, if you actually caught the entire thing, right?
This happened really fast. I remember doing an analysis on Link, and I'm like, okay, $2, we're coming down. But okay, fine, I said $2 if we do sort of get to the neckline of that big, beautiful M that you see on top there. But I'll be honest with you guys, I mean, I got a lot of questions on that. I was not expecting it to happen that fast. That was ridiculous. That literally just happened the next day. Like, it just dumped. So, yeah, that was brutal. But
you were so nonchalant about this. Like, oh yeah, Link is gonna come down.
I was nonchalant about it because I didn't have an open trade. That's the thing, guys. When you don't have an open trade and you're doing your analysis, you get to kind of approach it with less of a bias than someone who does have a trade on. So I had that advantage when I did approach the Link chart. So I saw that to be a potential play to the downside. But I was not expecting it to happen this fast. This was ridiculous. This was ridiculous.
That's a really interesting point. I want to press on that. If there's someone who is not trading the chart that you are trading, I think you should. But he gives you an analysis. He or she gives you an analysis. Perhaps you should be paying more attention to that person because there's no bias at all, right? There's no bias at all. So yeah, that is really interesting because I think a lot of YouTubers, especially Moonboy YouTubers, will give you only the bullish look on Chainlink, give you only the bullish look on Bitcoin. At Mango, we try our best to give you a non-biased, what's the word I'm looking for, Sean? Non-biased look, but a fair look at the markets, right? We're always talking about how this could very well come. It's always if this, then that.
Yeah.
That's why that's our mantra, if this, then that. It's allowed me to keep a non-biased approach. That's why we even use the Ichimoku, right? It keeps us fair. So yeah, speaking of that, let's go ahead and look at the Ichimoku on the 12-hour Bitcoin. Guys, I do have a few things to talk about in terms of the 12-hour. Let's go ahead and pull that up.
You've been playing this one quite actively, right? You've been trading the lower time frames quite actively this time. I mean, and rightfully so. I mean, look at the damn volatility. This looks small. Can you just do one of those measured thingamajigs and show them the volatility on each of those damn candles?
Let's just put it this way. Yesterday, we had a 20%, a roundish 20% move to the downside and a 20% move towards the upside. We can actually go ahead.
That's insane.
Yeah.
That is insane. Like,
so
Bitcoin doesn't usually see this kind of volatility on the daily, on the 12-hour at least. Sorry.
Oops, that was not what I was trying to do.
You can just auto. Yeah.
There you go. She's teaching me now, guys. So yeah, to the downside we had a good like 17% move, I think. Yeah, 17% move, and I didn't even take the wick there. So let's say 20%, and then again to the upside we did a good 16% move, and we're still going, right? So you could say that, hey, over these 24 hours we've already had 22%. Okay, these two 12-hour candles is 24 hours. We already had a 20% move towards the upside. So yeah, speaking of the 12-hour, I'm watching this on the Ichimoku, guys. The Ichimoku is still bearish, so you should be looking only for short plays. But I'm going to give you guys a bullish narrative right now. Again, keep in mind though, I'm looking only for shorts. We do have bullish divergence that I did talk about, right? No. Okay, so I did not do a video yesterday. Okay, yeah, so I didn't talk about this, but I was eyeing this yesterday. Bullish divergence over here that now has it has been activated. I'm not going to say it's going to see follow through. It has been activated, and a target for this would be a first target of around 6,422. But this is where it gets interesting, because the first target is around 6,422. I do believe that they're going to see some follow through on the 4-hour, because now on the 4-hour we're going to be putting in a trend change. If you see 12-hour have that target meet, the 4-hour is going to see a trend change of higher highs and higher lows, taking out these wicks over here. By the way, we had a massive short opportunity right over here that I missed. I'm really salty about. The Mango Vine calling that really, really nicely. Let's go ahead and show that right over here. Perfect.
Yeah, that was a beautiful one.
Yep. So this was really 25% move, right? So I didn't catch that. Andrew caught that. So this is a shout out to Andrew. Good job. I'm so impressed with the guy. I'm so impressed. Oh man, I'm impressed. Andrew has been working really
Yeah,
hard. You're
yeah.
seeing his dedication. You're seeing his curiosity in the seed program.
Yeah.
The amount of questions he asks, and I love that about him. And he's nailing it. He's catching levels now. Like, he's been in there for what, a month and a half now.
And his calls have been pretty damn
Yeah,
good so far.
he
Like,
caught
he's been
this
making
move.
some really
This
really good
is
moves.
really good, really
Good
good.
job, Andrew. Good
Really
job.
good job, Andrew. Really good job. So yeah, I think a lot of them are going to start out trading me
Yeah.
very soon. Robert, Andrew, Jesus. Okay, so, but that's the entire thing, right? That's the entire point of the program for you guys to
Outtrade Sean.
to learn more than me and then teach me too, so I can improve as well. Okay,
Yeah.
Like, that was the intention of all this when we started, Risha. So yeah, going back to what I was talking about though, the 12-hour. If it actually meets that target of around making a high above the 6,000
So which
mark.
wick are you looking at? I think the first one. So is it that one there?
Yeah, this wick.
The
So
10
if
SMA.
if we meet the target of the 21 EMA, we're going to likely take out this wick over here, right, at 5,955. It's going to line up with this 12-hour closing over this 10 SMA too. If we close over the 10 SMA, I'm going to be looking. That's a play in itself, right? Closing over this 10 SMA, look for a move to the 21 EMA / the Tenkin. That lines up with the bullish divergence playing up on the 12-hour too. So we do have a play over here. And what does that line up with? The Tenkin, 6,455. And that's where I'll be looking to take a play. But here's what's really interesting. Because we'll be making that high, I'm beginning to wonder, do we actually get up to that 7,000 level? The Kijun. If we actually get up there, that's going to line up with the test of the monthly 21 EMA. And if we actually manage to some freaking way close above this is some massive hopium, guys. If we close about the monthly 21 EMA,
that would be insane. That would be. There's something else lining up with your 12-hour bullish divergence thingy, what? At least a bullish play. Now this is loose. I'm not gonna, give this too much weight, but I've kind of made an observation in terms of the Kumo twist and a price pulling towards the Kumo twist.
Do we have it?
And we do have it. So we have that Kumo twist. Now, I don't know. Now, this
has played out in the past.
Right. So we usually have, you have one right there where the cloud from red. Yeah.
In one of the videos, right, we were looking, this is one of the reasons why we were so keen to take profits. Go back to the videos where we were looking at the price action over here and we were getting out of our trade. Why? Because major resistance at 10,500. 10,450 is what we were looking at, shot up to 10,500, and we took our first batch of profits here. Then we lost the daily uptrend. Okay, with these candles here, we lost the daily uptrend, started taking profits on the way out. And why? We actually looked at this, and we gave you guys a big hint over there. We looked at this Kumo, price hadn't come down there yet, but we looked at this Kumo twist and we said, that's giving me more confluence to why I want to be taking profits. And what do you know? Yes, Krisha. Yes, you're right.
And that Kumo twist, I don't like. This is the daily time frame, but I feel like it also is relevant on some of the lower time frames as well. So if you just kind of pull it up and just observe it. Now we don't have to do it here, but for those of you who have the cloud settings, and by the way, the cloud is a part of our Mango ribbon. For those of you who do not have that, you can PM me, and I'll grant you access to the Mango ribbon. But I think that's going to have some relevance in terms of, confluence with price actually coming up to that 6K region,
this
maybe
is 9,
even higher.
Krisha.
It's not always the case that
this is
price.
The CME gap. Oh my God. This lines up with Robert's theory too. Robert had a theory for this happening. Something like, I think this, he said. Oh my God, if that actually plays out, holy.
But that's definitely something. I think price could get pulled into that.
This is some massive hope you're giving people.
But no, you don't often see that price gets pulled right to the resistance of the Kumo, okay? That doesn't happen too often. Like what Sean just showed you on the daily time frame, that does not happen often. Yes, price does get pulled in. However, it doesn't get pulled in to an extent where it actually hits the Kumo twist. But you'll usually see a
pull back to it.
Yeah, a pull
a magnetic
to
pull
the Kumo. I don't know.
Let me show them an example of what you're talking about. So right over here, we actually had played for this move. Remember, on the way to 14,000, because we saw the Kumo over here. Did we know it was going to happen right away? The way it did, no. But we were kind of beginning to get a little bit cautious around these levels. And
even on top, actually, as soon as price did hit 14K, I was looking at the Kumo twist that we had right underneath us. I'm like, okay, from my analysis, from my back testing, I noticed that price likes getting pulled in every time we see that. So I started, being a little more prudent with my positioning and stuff. So
I wasn't looking at this, and now I'm beginning to think that maybe I should have, because this wasn't what I was looking at either. Was it on the 2-day? I'm beginning to. Yeah, it was on the 2-day that I was looking at this guy. This is the play I was talking about on the 2-day, and then it's stupid that I did not look at the 3-day Kumo twist, because perhaps we could have kind of. I don't know, man. It's hard. In hindsight, it's so easy to look at it, right?
Yeah, but no, I think that could. You're right. That's some major hopium there, but I think it has, like, if we just do some back testing, I think that has a bit of weight on it.
Daily bullish divergence too, Krisha.
Yeah, so there's a lot on it. But yeah, this is what we have for Bitcoin, Sean. Is there anything else you want to tell them about? Anything else that you found? Anything interesting or fundamentals or even technicals? Hell.
Okay, what I'll say is that be careful of being too hopeful. Okay, be careful of being too hopeful, especially if you guys are sitting in a massive the trend is your friend. And right now the trend is down. Wait for the trend to change. Be okay with. I think this is the piece of advice I can give people. Be okay with missing some moves. Be okay with missing some moves. Okay, be okay with it until there's a little bit more certainty in the market. Even if there's a even if there's a V bottom recovery, guys, it is unlikely we're going to go to 20,000 right away. So just be very careful to not FOMO into anything. Do not FOMO. That's what I can say.
Yeah.
Because we are living in times that we have never, ever seen before. Like, it's nuts. The street. Okay, we are living in a place where there's no emergency or lockdown announced, but the streets are empty. Are empty. Like, there's just no one out.
Everyone's out in masks.
Medical supplies are. The few people who are out in masks, and the medical supplies are actually beginning to. It's hard to get your hands on basic necessities now, so it's different.
Scary times. But guys, I mean, this is all we have for you, quite honestly, in terms of the technicals, in terms of the fundamentals with QE and stuff. It appears that we could possibly get a liquidity push. However, like Sean said, this could very well even play out over time, right? It's not necessary that it has to be like a V bottom up, but that's what we have in terms of fundamentals, technicals. We're in bearish territory right now.
Yeah.
We're both looking for shorts. So that's what we are. But like we said, volatility, like Sean's been, enforcing in this video, the volatility is insane. So be very careful. Be very, very careful. But are you drawing like a pattern?
Yeah, I am. Can you believe it? I've not been listening to anything she's been saying over the past 15 seconds, but no, and the volatility is.
He's become pattern
this lines
king,
up
guys.
This lines up too with us breaking these highs over here.
Yeah.
So there's a lot of confluence with us actually making a move. Do not take. I'm not saying go long, guys. None of what I'm saying is financial advice. I don't know what I'm talking about. If you listen to anything I say, you're going to become a stupider person and you're going to lose all your money. I am an idiot. Okay. Just keep that in mind before you make any decisions based on what I'm saying. Okay, so.
But yeah, guys, I mean, this is all we have for you for today. This is a pattern that Sean just came up with. Take this. Be careful. Very, very volatile waters out there. So, Do you want to bid them adieu?
Yeah, I do. Do the mango way. Do the stress-free way. And sit and absorb these great times. It is really, really a fortunate time to be learning the markets. Very, very fortunate for us millennials. It's nuts what's happening right now, guys. It's really nuts. Like, hopefully everybody comes out of this alive, because if you do, you're going to be much stronger for it, and you're going to have a war story to tell your kids, man. Yeah.
True that. But yeah, guys, with this, trade safely,
trade stress-free,
trade the mango way, trade the easy way, guys. Ciao.